Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Toronto at Consensus 2025 by CoinDesk. I'm here with Sean Lee. He's the co-founder of Magic Labs. We're here to discuss how to make AI-driven trading safe, transparent, and aligned with user intent. Sean, it is great to have you with us. Welcome to Trade Talks. One of my favorite conversations to have because I feel like we're so excited about the technology and almost the safety, the security is an afterthought. So explain to us what AI-driven finance is and how that shift is occurring.
Yeah, first, excited to be here. And I believe it's a huge trend in that's been talked about in fintech a lot. It's like the autonomous finance has been the holy grail for fintech. And with the recent years, we're starting to see crypto and AI not as very separate industry, but they're sort of converging. Because when sort of this level of reasoning and cognition democratized by AI, crypto has been democratizing programmable assets and money. And it's sort of like a lot of very synergistic aspects to it, because with AI, you can now automate a lot of the API calling, right? And as you know, crypto is open, right? So there's a lot of open API that's transparent and accountable. So now you can automate a lot of these transactions that's happening in crypto with agents instead of having the users manually click, right? And interacting with UI across applications, across chains, across protocols, learning what slippages are, learning what impermanent losses. It's just way too much for everyday users. And Magic Labs have been obsessed about user experience for the past 7 years. So we solved wallet creation. Now we're moving on to solve what happens after wallet is being created and simplifying that with AI as well.
It's interesting that you say that AI and crypto, there's a lot of synergies there because that's one of the things I think of as well as it relates to challenges and being able to regulate all of this. Because you're thinking about, safety of the consumer, you're thinking about data, how it's being used, and it feels as if we're at a crossroads here, right? So what are some solutions? What are some ways how is Magic Labs thinking about it to make it safe?
Yeah, so we actually just launched our first experience of creating a verifiable agent. So we called it Magic Newton. And what it does is you can dollar cost average using an AI agent. And afterwards, you can see a proof of this agent. It was not tampered with. It was running the action that it claimed to do. So we use a lot of infrastructure and cryptography underneath. And to break it down, we see trust in 3 ways. The first one is creating guardrails for AI agents. And you can think about this like when you log into Google OAuth, you're authorizing it some read permissions, write permissions. And we do the same for agents. So the users will authorize, you can only transfer up to this limit. You can only make this trade when Twitter sentiment is bullish, right? So you can set all these kind of permissions for the agents to operate it. So that's the first one. And this is great because the status quo is sort of Telegram bots. So people are already automating crypto using Telegram bots, but they literally have to hand over custody of their private keys, which is like very risky, insecure. Whereas this authorization model doesn't require handing over the custody of the private key. Therefore, it's much better in terms of like a stronger security posture. So guardrail is a super important piece. And then it's verifiability. It's coming up a lot in like crypto sphere. And then a lot of tech buzzwords are thrown around like trusted execution environment, zero knowledge proofs. But to like simplify it, the analogy I like to make is this is sort of like a flight black box with a notarized audit log, right? So every time something goes wrong, you can peek into the log and hold the correct party is responsible. And you can see exactly what agents have done, right? Or what its reason, what it's done. So that's the verifiability part. I think it's really, really important because today you can't have the whole AI agent on-chain, right? That's going to be very inefficient and expensive. So you kind of have to combine off-chain to on-chain elements, kind of like Chainlink, right?
Right.
Yeah. So they bring off-chain data on-chain, we're bringing off-chain compute and automation right, for these AI agents. And then so the last pillar on trust is trust through history. So over time, you're going to be able to see how well the agents and the agent operators have been performing. And with an economic incentive, they'll be rewarded for great behaviors and if, let's say, their node go down or if they kind of were behaving dishonestly. Yeah.
How is this different than, could you use a TradFi example here as a traditional retail trading platform? Because you can do dollar cost averaging, you can set different parameters, you can build, algos around your, your trading style. What are the subtle nuances? What differentiates it?
I think we're gonna have to come back to the crypto core ethos, right? Where when crypto first came out, people are like, "Hey, there's USD. Why have stable currency, right?" And stable currency will be good for like cross-border payment. It's more efficient. Users have control over their keys and assets, achieving that true ownership, right? And in this case, with this kind of model, you're removing the intermediaries, right? The same way as Web3, the core Web3 ethos, right? It's a roadmap towards decentralization, but the efforts have to be done, right? Like first, the user is using a smart wallet where they have full control over the remote control over their wallet. They're creating the permissions, right, to authorize the agents. So every part of the way, the user has agency over their assets versus having to blindly trust these platforms. They could be running agents or they could be using a real person behind the scenes too, right? Like you just are never able to prove that. But in crypto, using a lot of this cryptographic proof technology, you can know that mathematically, right? So you can prove those things out. Therefore, making it much more comfortable, right, for everyday user to trust AI agents, the same way that they feel comfortable using DeFi, right, because they know it's decentralized. There's these node operators that ensure the security of the network. There's economics behind it, kind of like Bitcoin mining, right, and staking. So
that's interesting. Appreciate the insight, Sean. Thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.